This is from PBS NewsHour in Wisconsin. Okay.
The Wisconsin Pension Fund, ranked as one of the most fiscally sound in the nation, took bold action this year. It invested in Bitcoin. Most all government workers are part of the employee trust fund that pays out retirement benefits. But for a pension fund widely known for being stable, prudent, and smart with investments, is this a departure or right on brand? Our next guest says it's certainly turning heads. We should note PBS Wisconsin employees are participants in the Wisconsin retirement system. We are joined by David Krauss, Marquette University Emeritus Associate Professor of Finance. And thanks very much for being here.
Yes, thank you.
So what is the reaction within the kind of investment industry to this news?
The investment industry is pretty amazed that a pension fund this early in the introduction of the Bitcoin ETF came on board. They expected it might take several years before there would be institutional involvement with Bitcoin investing.
So Bitcoin ETF is different and apart from the kind of Bitcoins that folks might have in their digital wallets?
Yeah, that's right. It was January of this year that the spot Bitcoin ETF was approved by the SEC. That allowed investors like the university systems or SWIB in this case, the Wisconsin Investment Board, to buy directly these securities that are regulated by the SEC, highly liquid, and traded on exchanges.
Still, was it a surprise to you to see that?
It was, but Wisconsin's Investment Board has always been innovative. This is a fully funded pension fund. Mm-hmm. So in a way, they have the luxury of being able to invest for the long term. They don't need to worry as much about liquidity as, say, the pension fund.
So I just want to point out real quick, when he says this is a fully funded pension fund, that's a very significant piece of information, because a lot of pension funds, we've seen this happen, they gamble and they don't have the money to pay out. This could be a huge issue. There's literally called the pension bubble that's out there. These big pension funds, state, municipal, whatever, big industry-wide pension funds, and they don't have the money to pay out the pensions. That's a problem when they gamble. So the fact that the state of Wisconsin, this Wisconsin pension fund is all state employees in the state of Wisconsin. That's all, anybody that works in government, anyone that's public school, the public broadcasting. So this is huge. And it has a track record, the state of Wisconsin, of being managed quite well, being financially prudent, and has the money. If everybody decided to retire today, they could pay it out, is basically what he's saying. So this is significant, that this wasn't some sort of last ditch effort, gamble, craziness to put Bitcoin in there.
Of Illinois, which is only funded at 50% of its level.
So should it cause pensioners, though, or workers to worry given the volatility of Bitcoin?
A lot of assets are volatile. I mean, if you really were to look deep down into the portfolio, you would see that a lot of assets, including some stocks, as well as some other alternative investments, are quite volatile in nature. Bitcoin has moved around a lot, but supply and demand are starting to balance out. And I do think the investment community is beginning to understand this more as a viable alternative investment.
So how much are they putting into Bitcoin compared to the fund itself?
Compared to the fund itself, it's just a toe in the water. It's 0.1%. Now, $180 million is not pocket change, but this is a $180 billion fund. I think it's just an entry point. I think they're testing to see the reaction of the public to whether or not there's resistance to owning this, and they're using it as a trial run. Because it really is not going to impact the portfolio substantially until you get to maybe a 1 or 2% positioning.
Because I was going to ask you.
So again, this is another point here to kind of go on the tail of the Bitcoin could potentially get to 500,000. So they have a $180 billion pension fund, and they just put 1% of it in there to the tune of $180 million. That's a significant amount of money, but $180 million is a lot of money, but it is only 1% of this portfolio. So this is why when we have these conversations, when I was in El Salvador and talking to Max Kaiser about this, and he would always bring up all of the assets throughout the world, the $4 trillion in assets that the entire world, you add up every pension and every stock portfolio and all that stuff, there's roughly $4 trillion. And right now, Bitcoin has about 1.4 trillion of that, maybe somewhere in there, 1.3, 1.4 trillion. So if it just goes to if 1%, do you see how significant this is? Do you see how 500,000 is not that far away? If every pension, not every, but even just more pensions put in 1% into Bitcoin, what that will do to the price. And again, there's only 21 million Bitcoin that will ever be mined. If Bitcoin just gets 1% of the total assets of planet Earth, so it goes from 1.3, 1.4 trillion to 4 trillion, right? That's a 3x right there. Gold is 14 trillion of the 400 trillion. What if it overtakes gold, which is what they said in the last video? What if it just gets another 1% of gold? Like, you see how this can start to add up? This is very significant. 1% of a portfolio is not a lot of money, but if everybody puts 1% of their portfolio into Bitcoin, the price will go up significantly.
What does your expertise tell you about whether this is a good investment for the pension fund?
Well, it's a good investment in the sense that it's going to add diversification. Mm-hmm. The objective of a portfolio manager or a fund is to maximize return while minimizing risk. Bitcoin, like other alternative investments, does not move in parallel with stocks and bonds. So therefore, it adds nice diversification effect. The potential upside returns are high, like as it could be with any new technology. Mm-hmm. And finally, because this is a currency with a limited supply, it actually can serve as an inflation hedge. I don't think very many people talk about the potential for it to remove volatility of government actions.
Do you expect other states to follow suit, watch this closely and follow?
Oh, I do. Now, I don't expect those that are underfunded can afford to do that, because this is a long play. I mean, the state of Wisconsin can afford to go through maybe several cycles. I think the long-term trend of this type of assets is going to be upward slope, but there's going to be dips, there's going to be peaks. But if you're a pension fund with low liquidity, you really can't afford long plays.
Do you feel like Wisconsin's investment in Bitcoin legitimizes it?
It does. The day that it was announced, that's when the SEC 13F form became available to the public. That day, Bitcoin went up 1%. Now, is it solely attributable to the fact that an institutional investor bought those? I think so. So I think the market did pay attention to that. And I would not be surprised to see other institutional investors move into this asset category.
David Krauss.
Isn't that interesting? That is like, yeah, as he said, I said 1%. They did 0.1%. As Alex Dasleby said in the chat, a 0.1%. Yeah, excuse me, my math was off. $180 billion. 1% would be 1.8 billion. So 0.1% is 180 million. They went as conservative as you could go. And still, that it was enough. $180 million was enough to move the needle. Bitcoin's price went up. And as he said, like the state of Illinois, so I grew up in Wisconsin and then moved to Illinois. So of course, Illinois only has 50%. Of course, Illinois mismanaged. But think of that. Think about that. And he also talked about the long plays. He said the short-term volatility, yes, but in the long run, Bitcoin keeps going up. Look at since its inception. Look at its inception, that what Bitcoin has done over time. Anyone that's bought Bitcoin and held it for 5 years has made money. They've made money.